We're looking at CPI data, that's inflation clearly, from what's been going on in the Gulf. The longer this conflict continues, the more we're going to see prolonged oil prices and the higher inflation are going to come across the global markets and obviously UK markets as well. Markets are expecting them to come out a little bit higher. If it comes out much higher than expectation, expect sterling to take off to the top side. Hello and welcome to ATFX's UK CPI data preview. Clearly the main driving force that we've got behind market moves and in sterling, which we're going to cover today, and euro sterling as well, is the geopolitical updates that we've got from the Middle East. Currently, we're waiting to see whether the US and Iran do sit down to talks, if we do get the Strait of Hormuz opened up again, and all the impacts that we know is going to come into the market from whichever way that swings. However, we have got a huge data this week, and particularly for UK markets. So this week, CPI data, which we're going to look at in a minute. We've got employment data, which comes out later today. We've got retail sales data, which could really swing markets and swing sterling in particular. Short-term impact likely to come from geopolitical updates, but longer term, we're going to be looking at how this data can affect the pound, that's the cable, as well as euro sterling, and we're going to see how it's going to affect the Bank of England as we're moving forward. Now, we're looking at CPI data from what's been going on in the Gulf. The longer this conflict continues, the more we're going to see prolonged oil prices and the higher inflationary pressures are going to come across the global markets and obviously UK markets as well. Markets are expecting them to come out a little bit higher. We know that the Bank of England are looking at these very, very closely. If it comes out much higher than expectation, expect sterling to take off to the top side. If it doesn't go as hard as we may be expecting it to go, then we could see a real sharp pullback in cable and probably an appreciation in euro sterling. So what have we got coming from CPI? We'll just check the data. Now, the big one, of course, is the year-on-year headline number. That is expected to go up to 3.3%, up from 3% last time out. So a big movement as far as major data goes. Month on month, we're expecting the number to go from 0.4% last time to 0.6%, and the core number to remain about 3.2%. Still well above where the Bank of England would like to see it. So we've still got the potential for rate hikes coming, and at the moment we're pricing in 1 or 2 by the end of 2026. So without any further ado, let's go and have a look at the charts, see where there's some potential trading opportunities, and there's a couple of good ones both in cable and in euro sterling. Okay, so here we are on the longer term daily sterling chart, and as you can see, we've seen some choppy moves in the market since the beginning of March when that conflict kicked off in the Middle East. Dollar appreciation for the first few weeks in a very choppy manner, as we can see here. These are daily charts, so these are massive moves, as you can see here, sort of like 1% moves on a daily basis. We managed to find decent support just under 132, the figure. That's where that trend line's coming in at the moment. We've hit resistance now around 136, that trend line coming in just underneath there. So a great trading opportunity for cable as we move into this data. I'll just bring the chart into a little bit more focus. This gives you a real indication on how choppy the market has been. FX, stocks, we know everything, mainly on the back of the dollar side of the equation, mainly on the back of geopolitics, but this is where fundamental UK data comes in. So expectations on that big number, 3.3%. If it comes in above that, 3.4, we're probably not going to see too much move. Anything over 3.5, 3.6, that really does put inflationary pressure on the Bank of England. They're going to be looking to move in with rate hikes. It's been sticky for the last couple of years anyway, despite the unemployment rate sitting now at 5.2%. Expect sterling to accelerate if we get those numbers, 3.4, 3.5, 3.6, even higher. We would look to be seeing a break of this line. We're probably going to be looking at these highs. As you can see, the high there, 135.99, 136, nearish. A break here, a solid break here, and we are in striking distance. 70 points seems a long way, but it's not in cable, as most people will tell you. It should break higher. First stop, probably these kind of highs that we saw here, just above 137, but longer term resistance all the way up at 138. If that coincides with dollar selling on good news out of the Gulf, that 138.50 resistance could come into play very quickly. Conversely, of course, we've got a lower number. If we're coming in around the 3% level, 3.1, we will see a sharp move down. First stop could be this 200-day moving average. That's just above 134, the figure. But a bigger move, and it wouldn't surprise me if we come down towards this trend line support, coming in just above 132. And as I said earlier, those levels here, 131.56, the low on the month, and I believe on the year, that would be the target we're looking for. So potential for massive moves in cable on the back of these numbers. The month-on-month number, yes, that will have an impact, but look at that year-on-year data. That's the one the Bank of England can be looking at. And if it is high, expect rate hike expectations to come right in and sterling to fly higher. Right, let's have a look at how it could move on the euro sterling chart. Bear with me a second. Here's the euro sterling daily chart. As you can see, it's kind of been trending and hitting a nice range bound situation for most of 2026. So topping out around about 88. Lows just above 86. So as you would expect in a dollar-dominated moving market, which we've seen over the last few months and certainly dollar-dominated over the last 6 weeks, this is where longer-term players would come in. If we're going to see an interest rate expectation differential between the UK and between the euro, and don't forget big sterling points on the euro sterling as well, this could see a break either way on what has been fairly range-bound trading conditions. So again, higher numbers would see euro sterling move to the downside. Support now coming in around about 86.40. We're not too far away from that. And I reckon, again, it will take that 0.2, 0.3 differential from the expectation on that year-on-year number. Next target's around that 86. Breaks here really do open the way, and that would be a big longer-term trade. Conversely, of course, a weaker number would see euro sterling jump to the top side. Initial resistance going to come in around these highs, 87.88, there were 87.89. That's the target. Trend line and resistance coming in just above 88. So those highs and that trend line coming into sort of very similar levels. Weaker numbers like underneath 3, 2.7s, 2.8s, that would be a big miss on this data. Expect it to smash through these 87.50 highs we've seen and challenge those numbers. So plenty of trading opportunities in the euro. Euro sterling will provide a longer term interest rate differential opportunity on what's going here. It takes the dollar out of the equation. It's the biggest trading FX cross in the world. We know there's plenty of liquidity out there, but you could see some really good longer term plays on that euro sterling. So that's it. CPI numbers, crucial. A lot of data coming out for the UK this week. CPI is the number one. That's the one that's going to give us longer term plays if it comes in off expectations. As always, if you haven't, please subscribe to our channel. But thanks for tuning in and good luck with your trading. Thank you.